Hey there, hope all is well. Back at you with some RTD news updates, and this is what's happening in the news as of right now. So today's Friday, and looks like the jobs numbers that came out weren't up to snuff, and so immediately a couple of things happened in the markets, predominantly being here from Wall Street Journal. Gold jumps on August jobs data. So here it just starts off with just a basic chart on what has happened just in the last 2 days or so. So it went up, went down, and now it's up. And so interesting to see how when bad news comes out, or unexpected news rather, there's always some type of market reaction. And today it is in gold and silver. And so here, just a little information for you guys. Gold prices rose to a 1 week high following the release of economic data that showed hiring in August was weaker than expected. Gold for December delivery was recently up 1% at 1329.70 a troy ounce on the COMEX. According to the National Bureau of Labor Statistics, the U.S. economy added 151,000 jobs in August, falling short of analyst estimates of 180. Falling short of analyst estimates. Wow, estimates. Wow, that's a big difference right there. And 151 jobs, sounds good, but when you have 90 million people that's not reported or actually in the workforce, number overall is pretty small. But that's what we get for this type of things that's going on. The week data provided a boost for gold, which fell to its lowest level since Britain voted to leave the European Union this week on fears that an interest rate increase could come as early as September. The data probably puts in doubt that the Fed will make a move in September, says Ira Epstein, a strategist from Lynn Group. This number didn't offer them the cover they needed. So, interesting article from Wall Street Journal. It's below if you want to read more about it. Here's another article here from Market Watch, and I think it's quite telling of the days ahead for gold. And so it's entitled "Gold Investors Prepare for the Best Month of the Year." And what I think rather is interesting about this article here is that the gentleman here, Mark Holbert, he basically has right here a graph going back, totaling rather all monthly averages since 1973. And so what he's basically saying here, returns in September are 4 times the average of 11 other months. So basically saying get ready for gold's best month of the year. So basically what's here is every month of the year since 1973, the averages overall has been, maybe 0.6, 0.7% of gold increasing as far as its overall average for the year. And so September here appears to be since 1973 when you average it out over those years have done extremely well for those that have held them. And so basically it starts here. September is the best month of the calendar for gold. That's welcome news to the beleaguered gold investor community, which has had to endure a frustrating couple of months as the price of gold backed off from its earlier July high of 1374 to closing at Thursday at 1317. It says basically that since 1970s, when it first became legal for U.S. citizens to own bullion, gold has produced an average return of 2.2% in September. The average return for the 11 other months combined is only 0.6. So just more things to how his data has kind of calculated that 2.6, 2.2 has been the average return on gold. And so it says also during this time, gold's seasonal tendencies therefore stand in stark contrast to the stock markets, where September is by far the worst month of the year for stocks. So, and then he also goes down and gives some more statistics and things like that he has come up with his organization. So definitely some good information if you guys are interested. I thought this chart was very telling of the days ahead and how today's gold spike could be the start of something good for the remainder of this year. So love to hear your thoughts. Check it out if you want to. Here's an article out of RT, and it's came out last night for the most part, to make mainstream news, and it has to do with the idea that Deutsche Bank refuses clients' demand for physical gold. And so apparently there's a subsidiary of Deutsche Bank over in Germany, and it's called Extra Gold. And so it's basically, people are starting to ask for their gold based upon their, them having invested in it. over the years, and people can't get their money because they're saying no way. So just a little information here says clients of Germany's biggest bank who has invested in the exchange traded commodity extra gold are facing problems when they want to obtain physical gold, according to German analytic website godmodetrade.e. Extra gold is a bond on the Deutsche Bank Bourse commodities market, and the Deutsche Bank is a designated sponsor. On the website, Extra Gold says that its clients have the right for physical delivery of gold. It says, however, despite claims that every virtual gram of gold is backed by the same amount of physical gold, clients have been refused the precious metal upon demand. So once again, the concept of if you don't have it in your physical possession, then maybe it is not really yours overall. So just something to think about in regards to ways of holding and storing your assets. If you don't have it in your possession, then maybe it's really not yours overall. So something worthwhile. Extra Gold said its holdings amount is to over 85 tons of gold. So they say they're holding 85 tons of gold, but yet if one person can't obtain their assets from this company and out of this fund, then obviously they may not really have 85 tons. So articles below if you want to hear more about that or read more about that. Here's an article from the Daily Reckoning by Nomi Preens, and it's just more of an indicator of how corrupt our monetary system as well as just the overall banking sector in general. So here, this article here entitled "The Big Banks Hiding Money for Elites." And so basically, it's a quite lengthy article, but I'll sum it up as best I can. She basically starts off with talking about how if you're a citizen and you have just your normal transactions throughout the day, making deposits here and there, withdrawals or whatnot, you are considered possibly a terrorist, or the bank must report you for fraudulent or suspicious activity. But on the other end, if you are a big bank and you have big money, and preferably if you are involved in the money laundering / drug industry, then you probably can get away with it because the banks are too big to be jailed and the drug cartels are too big to be prosecuted and brought to justice. So she goes through just the start of this article, deals with some of the Obama administration policies that's been in place for money laundering and things like that, and a lot of the terrorist activities and things implemented that has been put in place for the smaller people, you and I, for example. But yet on the other end, you have HSBC, who has been convicted of money laundering and paid fines and criminal allegations, all that stuff like that's come true. They've admitted it, but yet no jailing, no nothing there. And so it just basically talks about a conference she attended and things like that, and just how there's some lawsuits in place by what seems to be some pretty big wig type of attorneys or whatnot that are filing suits rather against HSBC. It's ongoing as we speak. And so it seems pretty promising from the way she's kind of breaking it down that, there will be some justice somehow, one way or another. So it's funny how this little video here is Supreme Justice, not Supreme Justice, but Department of Justice attorney or whatever, or yeah. She's basically giving a speech here about how HSBC has this is back in 2012 especially, but how they were basically guilty of money laundering and whatnot, and then it gives you a bunch of right along inside this video here, it lists about a bunch of graphs and things like that. It's right next to them as they're giving their little spiel about the process that the drug cartels and HSBC and how they were involved in. It goes into great depth as far as how they actually operated. And so here it just summarizes how they were going to the HSBCs in Mexico and depositing 500,000, 1 million in cash with big boxes, and there was never any question about where this money was coming from and who was it from, and people didn't have to verify employment status and things like that. It just came with boxes of cash, dropped it off at HSBC, and then sent it wherever they wanted to send it to. So just more of insight into the actual banking sector and how corrupt things are. And so definitely a good article worth reading. And if you're interested, it'll be below. Here's another article here that has to do with our monetary system and predominantly the idea of wanting to basically take us towards a cashless society. So this is an article from Daily Reckoning by Mr. James Rickards, and it's his typical build up of, explaining the attack on cash, such as inflation, negative interest rates, and just, overall taxation. But then he gets into something that I think is well worth, hearing about. And I haven't really heard about it from any other um, commentators or news sources, but it has to do with the idea of the G20 is beginning to meet pretty soon. And so one of the topics of discussion, he's saying, is a global taxation, which is underway. And it's has to do with, it's called BEPS, or the Bank Erosion and Profit Shifting. And so it says here, as if inflation, confiscation, negative rates weren't enough, the globalists are coordinating a new plan for global taxation. As usual, there's a technical name for global taxation, so non-elites won't understand the plan. It's called the Base Erosion and Profit Sharing, profit shifting. He said the BEPS project is being handled by the OECD and the G20, with the IMF coordinating, contributing technical support. If you're interested, you can go to BEPS. There's an entire website devoted towards a global taxation plan and timetable. So a little link here for the website to find out more about that. But it says here the website is worth a look. To paraphrase what the famous line attributed to Trotsky, you may not be interested in BEPS or BEPS, but BEPS is interested in you. So just the idea that G20 is meeting pretty soon, and there's some things on the table, because clearly they're going to be discussing, the current implosion of our monetary system and economies globally. But yet the biggest thing is going to be how can they unify themselves to sustain what the current model has been. And it's going to probably end up being some type of, one unified body that comes up with a global taxation. And so this, BEPS, is definitely going to be something that will be discussed, that eventually will be rolled out to us, and we'll hear about it, but yet won't know much about it. So if you're interested, you can find out and do some research on it yourself with this website here. Definitely a good article. James Rickers does a good job of breaking things down and, clarifying it for those that, are interested. So articles below. Here's the last article here, and it's just the overall depiction of the actual state of our economy. And so this is the article from Zero Hedge, and it's the chart of the day. And it says U.S. factory orders tumble for longest streak in history. And it says 21 months. U.S. factory orders have declined year over year ever since the months of October 2014. This is the longest period of decline in U.S. history since 1956. And then what's interesting is just this, whenever something is put into visual perspective, you kind of like, get a better look at it. So here we have, just this chart here of U.S. factory orders year over year since 1960. And it's saying that, hey, we are right here. And this is a very long streak. But then what's most notable is the fact that all these little long lines are, recession lines. And it took a major plunge here. But yet we're supposed to be in an economic recovery, according to, mainstream news and, those that want us to, believe the narrative. But yet just right here is a very long strip of red, which shows that for a very long time, we've been having problems. And so basically what he's saying is these indicators, this type of data, amongst many other forms of graphs of this nature, pretty much show already that we are in a recession. It's just not made official yet. So I thought this chart was interesting, the fact that, all this red is never a good thing. And so it's just a matter of, when will it become mainstream? And a lot of, commentary and, individuals on the net say that basically after the election, that's when the recession will be officially announced, even though it's, something that's known about, 6 months to a year in advance, just based upon the data. So interesting stories here, man. This is what's happening in the news on Friday. Hope you guys enjoy this. As always, share this information. The goal is to get this out to many people as possible so that people can become more monetarily aware of what's going on and begin the process of rethinking everything they thought they knew and was told. And so also, if you're new to this, subscribe and stay in tune. Looking forward to bringing you more news and more RTD interviews. See you later.